Have you ever looked at your bank account and wondered, wait, how does the bank afford all those fancy buildings, massive signs and free pens when I don't even pay them directly? It's a fair question. On the surface, it looks like banks just hold on to your money and give you a debit card. Simple, right? But here's the thing. Banks are businesses, big ones. And just like any business, their goal is to make money, a lot of it. So today, we're going to pull back the curtain and explain how banks really make money off of you and off of almost everyone else who parks their money there. Spoiler alert, it's not just about fees. The real story is way more interesting. Let's start with the most basic idea. 1. They use your money to make more money. When you deposit money into your bank account, whether it's checking, savings, or even a certificate of deposit, you're basically giving the bank permission to use that money. You're not just putting it in a vault with your name on it. The bank takes that money and lends it out to other people. They give out mortgages, auto loans, personal loans, business loans, you name it. And when they do, they charge interest. So for example, you deposit $1,000. The bank takes a portion of that, combines it with money from other people, and lends $200,000 to someone who wants to buy a house. That person pays back the loan over time with interest. Now the bank is earning interest on money it technically borrowed from you, the depositor. And what do you get for that? A little pat on the back and maybe 0.01% in your savings account, if you're lucky. This is called the spread. It's one of the bank's biggest sources of profit. They pay you a tiny bit for your deposit, and they make a lot more from someone borrowing that same money. Sounds unfair? Maybe. But it's how the system works. 2. Interest rate differences, aka the spread. Let's break that down further. Imagine you have a savings account earning 0.05% interest per year. Meanwhile, the bank offers a personal loan to someone else at, let's say, 8%. That difference between what the bank pays you and what it charges someone else is pure profit for them. That's called the net interest margin. And it's why banks love people who save money but never touch it. Because the more stable your deposits are, the more the bank can lend out and earn from. They don't need your money to sit there forever, just long enough to do something profitable with it. 3. Fees, fees, fees. Oh, and more fees. Now let's talk about the part that's a little more obvious. Fees. Even though banks are making money from lending, they've also figured out how to make even more from, well, you messing up. Overdraft fees, late payment fees, ATM fees, maintenance fees, wire transfer fees, inactivity fees. Yes, some banks charge you for not using your account enough. In fact, banks make billions of dollars each year just from fees. Overdraft fees alone are a huge cash cow. You swipe your card, your account is low, and boom, $35 overdraft charge. To add insult to injury, some banks even rearrange your transactions to maximize how many overdraft fees they can charge in one day. Not even kidding. So if you've ever felt like the bank profits more when you're struggling, well, you're kind of right. 4. Credit cards, the money-making machine. Credit cards are another massive moneymaker for banks. When you use a credit card, a few things happen. The store pays a small fee to the bank every time you swipe. If you don't pay your balance in full by the due date, the bank charges you interest, usually pretty high interest. If you're late, that's a late fee. Go over your limit? More fees. And the interest on credit cards is no joke. Some cards charge 20% or more per year. That's like taking out a personal loan from someone who really doesn't want you to pay it back quickly. Now, if you pay your card in full every month, good job. You're using the bank's money for free, but most people don't. That's why banks love credit cards. They're easy to use, easy to abuse, and incredibly profitable. 5. Monthly account fees and premium services. Some banks charge you just for the privilege of having an account. Others will offer premium checking or savings accounts with extra features and extra fees. You might get things like identity protection, access to a nicer looking debit card, or slightly better interest rates. But if you really break it down, most of these features are things you probably don't need. They're just more ways to turn you into a paying customer. Even little charges, like $5 or $10 a month, seem small, but multiplied by millions of customers, that's serious income. 6. Business loans and corporate services. While we tend to think about banks in terms of personal accounts, a huge part of their revenue comes from business banking. Banks make large profits by giving loans to companies, helping businesses manage payroll, offering merchant services for payment processing, and even providing financial advice to corporations. These deals involve way more money than a typical consumer account. A single business loan could be worth millions and generate huge profits in interest and fees. So while you're trying to avoid a $3 ATM fee, the bank might be earning 6 figures helping a company expand to another country. 7. Investing with your deposits. Did you know banks also invest your money? Depending on regulations and the type of bank, they can put a portion of your deposits into different kinds of investments: government bonds, corporate securities, and more. This allows them to earn even more returns with relatively low risk. And again, you don't see much of that money. You get a small slice, if anything, while the bank keeps the rest. It's another way they make your money work for them. 8. Mortgages and loan reselling. Here's a cool but kind of weird part of banking. Loan reselling. Let's say the bank gives you a mortgage for $250,000. You might think they're going to wait 30 years for you to pay it back. But no. What often happens is they sell that loan to another company, usually a bigger financial institution or government-sponsored enterprise like Fannie Mae or Freddie Mac. The bank gets paid up front, plus a fee, and moves on to the next customer. It's kind of like flipping a house, except they're flipping your loan. This helps them free up cash so they can issue more loans and repeat the cycle. 9. Selling you financial products. Ever walk into a bank and suddenly feel like you're being sold something? That's not by accident. Banks make commissions by selling insurance, investment accounts, retirement products, and more. These aren't always bad, but they are revenue-generating machines. Sometimes these products are helpful, other times, not so much. The bank rep might push what gives the bank the biggest cut, not what's best for you. So it's always good to read the fine print and ask questions before signing up for anything. 10. Data and partnerships. Here's one you probably didn't think about. Your data. Banks track your spending habits, where you shop, what subscriptions you pay for, and more. They may not sell your personal info outright, there are laws about that, but they definitely use your data to make decisions, or partner with other companies to offer targeted deals. The better they know your habits, the better they can market products to you. So yeah, even your swipes are worth something. So, how do banks make money off you? Let's recap. They take your deposits and lend them at higher interest rates. They charge you fees for overdrafts, for being late, for just existing. They make bank, pun intended, on credit cards. They sell your loans. They invest with your money. They sell you financial products. And they leverage your data to do even more. Sounds intense, right? But here's the deal. This isn't about hating banks. It's about understanding how they work so you can play smarter. Because once you know the game, you can make better choices. Or use accounts with no fees. Pay your credit cards in full. Use savings accounts that actually earn decent interest. And don't be afraid to look into online banks or credit unions. They often offer better terms because they don't have to pay for skyscrapers and marble lobbies. Remember, your money should work for you, not just for them. Thanks for hanging out with me. If this helped you see banking in a new light, hit that like button and share it with someone who's still wondering why their free checking account costs $15 a month. Stay smart, stay curious, and I'll see you in the next one.